Assalamu alaikum wa rahmatullahi wa barakatuh. Our student in Islamic accounting. Today we have another chapter which is about the Murabaha contract, Murabaha finance definitely, Murabaha finance and contracts. As you can see below, Murabaha basically an arrangement where the customers who wishes to purchase a product or goods request the bank to purchase that items and sell that items to the purchase order at cost plus declared profit. That means I go to the bank and I ask the bank to purchase this machine or this car or this house, and I will buy it from the bank with adding some profit, a percentage of profit to the bank. The Islamic bank specify the cost price of the commodity or the items that he bought and sell it at declared profit plus declared profit. They add a profit on the purchasing price. In simple terms, the Murabaha is sale of goods plus the markup. For example, I want the bank to purchase car. It's costed 2,000, and the bank told me that he will add another 1,000 or 2,000 as profit. So the cost it will be the selling price will be cost plus the declared profit 11,000, and they decided how long it will take to repay it. Sell goods plus at cost plus markup, where the purchaser should inform of his cost of purchase and the profit amount. The bank should also inform the purchaser about these details. Bank usually they use another contract, they call it بيع المؤجل or بيع بثمن آجل. What does it mean? Another related mode of Murabaha of finance is بيع بثمن آجل, as you can see below, or بيع المؤجل. It is basically trade deal in which the seller allow the buyer to buy the price, the project of the commodity at future date, either in lump sum or installation. They pay it lump sum 11,000 after 2, 3, 5 years, or as installation monthly. They have to pay 200, 300 depending on the period of the contract. Okay. Going down, you can see also the table which showing the similarities and differences between Murabaha, the normal contract of Murabaha, and purchase order. That's mostly used in the Islamic bank. Murabaha in nature, both of them similarities. Both of them are trade financing. Both involve three parties: the purchase order, bank, and the seller. This is the similarities. Going to the differences between Murabaha, normal contract, and بيع بثمن آجل. Murabaha obligated to disclose markup, obligated, while بيع بثمن آجل disclosure of markup is not obligatory. It's not compulsory. Second difference, sale plus markup, the repayment can be deferred or lump sum. بيع بثمن أجل repayment is deferred payment. They delay as installment usually. The main difference here, customers may opt not to purchase. There is no obligation in Murabaha, in normal Murabaha. There is no obligation to purchase the commodity by the purchase order. While in بيع بثمن آجل, customer obligate, they have to sign, they have to make any obligation that he will or she will purchase the commodity. Otherwise, after the bank purchase this commodity or product or the car, the customer is saying, no, I don't want it. Here in بيع بثمن آجل, there is obligation, and there is a lot of talking between the scholar in this issue. The obligation, is it allowed or not allowed? The fourth difference, two contracts executed at two different times needed to recognize asset temporarily. Usually there is two contracts, but there is a gap between them. In Murabaha, the bank purchases the product and keep it with it for some time, and the purchaser come again and agree. But in بيع بثمن آجل, two contracts executed at the same time. They go to the automobile car or the place they sell that product, the employee of the bank and the purchaser. Both of them they go. Both of them they have to sign two contracts. The bank will purchase the product from the seller and he will sell it again in another contract to the purchaser or the order of the purchase. You can see it here in example. Yes, we have an example here how to calculate the markup, the profit and the journal entries as well. Going to example number 1. Bank Suhar provide finance facility based on Murabaha to the purchase order principal to Ahmed for purchasing a house. The financing is amount 300 at constant rate return 8% for period of 5 years. So these three main information. The bank will finance Ahmed 300,000 to purchase that house, and the bank will add 8% as profit for the bank. The repayment will take 5 years. At the end of contract, Ahmed owes bank amount 32,000. There was a difficulty with him and he couldn't pay all the amount. Still 32 owes by Ahmed. As part of normal requirement, the customer will be charged penalty fees 3% per annum for any outstanding amount. It's a penalty. Actually, also this penalty, they don't keep it with them according to the rule, according to the IBRF in Oman. They collect it from the customer and put it in a charity account to use it in social activities. 3% per annum for outstanding amount due at end of the contract, and the amount that collected is normally distributed as charity. That's the point. So the requirement, first requirement, prepare the extract balance sheet, income statement, and then prepare the journal entries. Okay. First we will prepare the income balance sheet or the extract of balance sheet and income statement. We have بيع بثمن آجل. Or year 0, year 1, year 2, year 3, year 4, and up to year 5. How much? This amount should be, we have بيع بثمن آجل and unearned revenue. Unearned revenue. How we'll find it? We have 300,000 that paid by the bank, and the bank will add profit or mark up 8%. 8%. 24,000. 24,000. For how many years? For 5 years. It will be 120,000. This is the amount will be added to the real price or the cost of the asset or the house. This is the cost of the house, and this is the amount that the bank will add it to this cost. So the total will be 420,000. 300,000 plus 120,000, it will be 420,000. Then the bank will make it as in balance sheet in year 0, 420,000. The bank has unearned revenue because still we are at the beginning of that contracted 120,000. The normal cost is the difference, which is 300,000 between them. Then after first year, what will happen? It's better to make the journal entries together. At least we will make the two years, year 0, 1, and final year, because year 2, 3, 4, same, it will be repeated. Now we will go to the journal entries. In year 0, we will make Murabaha finance account as a debit. Murabaha finance account debit, and credit cash. As well, we have to recognize our revenue, which is unearned. Revenue. Cash, the bank will pay it 300,000. Revenue, which we calculated 120,000, 8%. So the total of them 420,000, which is clear here. This is the first journal entry. First year, the customer has to pay to the bank or to repay. Then the bank will collect some of this amount of the contract cash. We'll make it in two journal entries: debit cash, credit Murabaha. We have to reduce Murabaha finance account. How much he has to pay? He has to pay this amount, 420,000 should be paid through the 5 years, so we have to divide it by 5 years. 84,000 should be paid. 84 and 84,000. The first installment payment. Then, as well, there will be unearned revenue now earned, so we have to reduce it. It's credit, we put it in the debit side. Unearned, it's better to make it here. Debt, unearned revenue. Then credit, it's earned revenue, or we could put profit and loss account, or we could use as well revenue, Murabaha revenue, for example. How much? 120,000 as well, divided by 5 years or 5 installment, it will be 24,000. So the Murabaha finance will be reduced from 420,000 420,000 minus 84,000, it will be 300. It will be 336,000. Reduce it from 400 by 484. The remaining amount in next year it will be 336. As well, and this one, unearned revenue, reduce it by 24,000. So 120 minus 24,000, it will be 96,000. 120 minus 24,000. So the remaining 240,000. Yes, 120. Year 2, we are not going to repeat the same journal entries because we have to make this journal entry. Year 0, it will not be repeated. I mean, year 1 is the journal entry for year 1. Year 2, the same journal entry will be repeated. That means the بيع بثمن آجل balance will be reduced by another 84,000 and 336 minus 84,000, it will be 252,000. And here unearned revenue, it will be reduced by 24,000. 96 minus 24,000 will be 72,000 as well. 81, 180, the remaining amount. Is it 0? Yes, 180. Going to the year 3, بيع بثمن آجل will be reduced by the same amount by 84, 252,000 minus 84,000 will be 168. 72,000 minus the 24,000, which is recognized or earned, the remaining it will be 48. So remaining 120,000. Going to year 4. Year 4, there is reducing again 168,000 minus 84,000, again 84, and here 24,000. After we reduce the 24, the remaining will still 60,000. Yes. At the end of year 5, they will repeat the same amount, 84. Then at the end it will be 0, and also we will close the unearned revenue by the same journal entry. This is the journal entries for this case. But as mentioned there, still the amount owed, the amount not collected, I think it's 30. Now the battery is going down. Year 5, that's it. Just a moment, I will be back. Okay. So at the end of year, as we said, year 2, 3, 4, 5, 4, it will be same as this 2 journal entry. It will be repeated in 2, 3, 4. Year 5, according to the question, the customer still owed 32,000. So we didn't collect our amount, cash and account receivable. We'll do credit the Murabaha finance when we make the journal entry at the end of year 5 here. Murabaha finance account. Again, the amount is 48. That should be paid by the customer, but still he didn't pay 32. According to the question, the customer owes 32. Out of 84, he owes 32, so he paid 52. Yes, the difference between them. 52. 84 minus 32, 52 that paid in cash, and still the customer has to pay this 32. Unearned revenue, it will be the same in year 5 as well. There is no difference here. But when the customer come to pay that amount, when the customer come to return the 32, we will collect it, but we will add penalty. As mentioned, there is 3% penalty that should be paid because he delayed the payment. So we will receive it cash, and we have to close the account receivable, cash and credit account receivable. I will make it in one journal entry, cash and what we call it, penalty. Yes, cash we will collect both, credit account receivable, and as well we have to receive penalty. Penalty account receivable 32. He has to pay 3% out of 32. 3% is 960. 32,000 multiplied by 3%, it will be 960. So he has to pay the 32,000 plus 960. So we request him to pay these two amounts, 32,960. 32,960. The sum, the total of the owes amount plus the penalty amount. And the penalty amount, when we pay it to the charity later, we'll put it in the debit and credit cash later on. That's all for this part. Your job, you will find it on the model to do some exercise, maybe question 1 or 2. I will put it on the model for you. Assalamu alaikum wa rahmatullahi wa barakatuh.